Wednesday, September 6, 2017, Monaco 64, home of alternative economics and contrarian views. So I want to talk about the dying days, I think, of the petrodollar. And what am I going on about? Well, it's not the death of the dollar. So, as we know it, the dollar will still be used, as a currency in the States, abroad. But I think the importance of the dollar is waning. And one of the big stories that's come out this week is how China is getting ready to start trading a yuan priced crude oil benchmark contract. That's come out a few days ago. There's been a story in Zero Hedge and also in some other publications. And I've had a few viewers ask about what I thought about it. Well, first of all, the Shanghai Futures Exchange, and that's the exchange where they trade gold and also silver. One of the commodities they trade on the Shanghai Futures Exchange. That's been trading for a while already. If you look Shanghai Futures Exchange, there is a gold contract, there's a silver contract, there's copper, aluminium, zinc, lead. They trade everything there. And now there's another exchange which is part of the Shanghai Futures Exchange, but it's a new exchange. It's called the Shanghai Energy Exchange, Shanghai International Energy Exchange. And there's a story here from Eurasia Review. It says, and this is from September 5th, China could buy oil with gold-backed yuan. Op-ed. It's an op-ed, and it says the world's top oil importer, China, is preparing to launch a crude oil futures contract denominated in Chinese yuan and convertible into gold, potentially creating the most important Asian oil benchmark and allowing oil exporters to bypass US dollar denominated benchmarks by trading in yuan. Nikkei Asian Review reports. So basically, when you're going to be trading this oil contract on the Shanghai International Energy Exchange, you're going to be buying or selling oil in yuan. And let's say you're Saudi Arabia or another country that sells oil to China. You'd be, let's say you sell oil to them on the futures exchange. You will get yuan, but what you'll be able to do is take that yuan and go to the other part of the exchange and put it into gold. So that's what's going to happen, because I think a lot of international, actors or counterparties were concerned that they were concerned that they would be stuck with yuan, but now indirectly they'll be able to transfer that into gold. I guess it's the competition for the COMEX. The COMEX is now part of the CME. You can trade gold contracts there. You can trade oil on the NYMEX. They're all interrelated. And interesting here, I've got on the internet, below are the 15 countries that imported highest dollar value worth of crude oil during 2016. This is from worldstopexports.com, crude oil imports by country. China, number one, $116 billion, 17.3% of total crude oil exports. Second, United States, $108 billion. But what's more important is all the other countries like China, Japan, South Korea, Netherlands, they could choose to buy this oil in another currency. China especially, they won't be having to recycle all the US dollars if they're, getting, they've been able to pay for their oil in yuan. And there's enough gold there in the exchange for the sellers to exchange it to gold. That's going to really lessen the importance of the dollar as a a trade currency. And the petrodollar was created in the 1970s, I think around 1973, 74, and it just happened to be after President Nixon defaulted. The United States defaulted on its promise to pay countries in gold for US dollars at $35 an ounce, and he closed the gold window. So since 1971, the dollar's been basically backed by nothing. So the the U.S. had to do a deal with the Saudis that and I think it was orchestrated, of course, by Henry Kissinger back in the early mid 70s. The Saudis would get protection from the U.S. Military. They would get investment, some investment as well, some help to develop the country. And the Saudis promised to only sell their oil for dollars. And, and the thing is, the Saudis were at the time the biggest oil producers, oil exporters, part of OPEC. So they dominated it. And so all the oil in the world, which is a commodity that has to be purchased by everyone, had to be paid in dollars. And that's why the dollar has been able to remain, the reserve currency for so long. And that's why they call it the petrodollar. But now China, they've been very, very stealthily and quietly and gradually, trying to basically, how can I say, chip away at this petrodollar system. They started out, creating a Shanghai Futures Exchange, and you can see, the products that they trade there are all, all the metals, energy, chemicals, and they've been doing it for a few years. They've got gold and silver. They've been big buyers of physical gold and silver for the last few years. And now they're putting the last little piece of the puzzle in there by creating this oil futures contract, which basically will allow people to, back this contract by gold indirectly by, getting out of the yuan and into gold. And that's not only for for oil. All the other metals and everything else that's traded there can technically be converted into gold. So the story goes here that, from this Eurasia review, it says, last month, the Shanghai Futures Exchange and its subsidiary, the Shanghai International Energy Exchange, INE, successfully completed 4 tests in production environment for the crude oil futures, and the exchange continues with preparatory works for the listing of crude oil futures, aiming for the launch by the end of this year. And it goes on to say, this is a quote from founder of U.S.-based macroeconomic research company, FFTT. He says, the rules of the global oil game may begin to change enormously. And it says, yes, the rules are changing. Welcome to a truly multipolar world where nations no longer have to be shackled to the dollar. So it's not only, I would say to Mr. Luke Groman, I would say that not only the rules of the global oil game will be changing, the rules of currencies will be changing. All that means is that the dollar is going to be not so much in demand. All that means is that U.S. interest rates will start to go higher, because a lot of these countries, when they buy, when they recycle their dollar reserves, they usually buy treasuries or T-bills, and that keeps the price of U.S. treasuries or U.S. securities high and the yields low. If they're not having to buy as many of these, that's going to drive up interest rates Maybe that's what the Fed is seeing. Maybe that's why the dollar has been going down so much this year. Maybe that's why there's so much distractions in the world, especially concerning North Korea and the geopolitical problems there. And also that's why there were so many distractions in the Middle East. Maybe the Americans could see it coming and they're just trying to delay it. But now it looks like it's starting to happen. Does that mean it's the end of the dollar per se? No, it just means that instead of the dollar being 2/3, for example, of global monetary reserves, it might drop to maybe 55% in about 5 years, or it might drop to 50% in about 10 years. Who knows how quickly it will happen? But it's going to change monetary policy for the U.S. a lot, because the U.S. has always had the kind of and I quote here, exorbitant privilege. It was a French economist who said that, the exorbitant privilege of being able to print its money to buy anything from anyone. So now the Chinese are kind of changing the game, and they've done it. They haven't done it overnight. They've done it very gradually. And the interesting thing is that you don't hear about that too much in the mainstream press. There's no talk about that. You have to read the alternative media for that. And so that's what's happening. It's not really a gold-backed oil contract. It's more a yuan priced oil contract, futures contract. And then once, let's say Saudi Arabia sells some oil to China, they've got the yuan. They can take that yuan on the same exchange and put it into gold and get delivery. The Chinese actually have the gold. I've worked in the futures market for over 20 years, and I did a lot of trading on the COMEX for clients and big clients. They used to do a big size contracts, institutional high net worth individuals, and we talked about maybe taking delivery of the gold, and but speaking to my bosses, they said, "Oh, we never do that. You shouldn't encourage delivery of physical gold." But I'm sure that in China, on their metals, Shanghai Futures Exchange, the metals exchange, there will be delivery. Saudi Arabia will be able to take, delivery of its gold. What else? So, and here's the list. And it doesn't really matter who Saudi Arabia buys the oil from, but 29 tons of crude from Russia they buy, 27 tons from Angola. That's yearly imports. 26.5 tons from Saudi Arabia, 18 tons from Iraq, and the list goes on. Mostly, of the Asian BRIC countries they buy from. So it will be interesting to see. Yeah, and I think it is pretty important. And we'll just have to wait and see until this oil contract starts trading on the Shanghai International Energy Exchange, which is linked to the Shanghai Futures Exchange. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. And you can follow me also on Steemit and on Twitter. If you like to make a donation to the channel, there's some links below in the description. I accept Bitcoin, Ethereum. I've got a Patreon account. I'll talk to you later. Bye.